Hello, my name is Chidi Uchendu. My reason for joining the apprenticeship program, Forex apprenticeship program with Maestros, is because though I have traded before, I never got it right. I knew something was missing in my trading. I have blown many accounts and I just needed a proper guide. I needed a proper training as to how to really be a trader. So when I came to the program, I benefited a lot from the program. One of the major reasons why I came was to unlearn some of the things I have learned before. In fact, I was looking for a cure for greed. My primary reason was looking for a cure for greed, indiscipline in trading, because that has been the problem I had. But when I now came to the program, I realized that there are some fundamental things I lacked. One of the major things I learned from this program was drawing swing lines. How to draw swing lines using MA20. That was like a breakthrough for me in terms of having a fundamental knowledge of seeing in the market, like my eyes was opened, I could see. So drawing swing line was my basic, first of the best of what I learned. And so far, the next best thing I have seen and benefited from the program is research and the kind of confidence that research brings. Now I'm beginning to see how I can become a trader that is disciplined. I realized that discipline can only come with knowledge, proper knowledge, and confidence from a strategy. And that confidence in a strategy can only come through proper backtesting. So the researches that we have been doing on pivot point strategy, on failure swing, and riding the trend, they are, apart from the results, the act of seeing myself do it, going back and seeing the failures, number of winning trade and losing trade, and the sequence of how it occurs, builds a lot of confidence, has already built my confidence that yes, I can do this. I could prepare my mind now knowing what I'm against in the market, unlike before. For anyone who wants to, or rather who is contemplating on joining this apprenticeship program, my advice is, first of all, even if you have been trading before, just drop every knowledge you think you had before. That's exactly what I did. Drop whatever you think you knew. Keep it aside. Come with very open mind. Come and learn.
Congratulations to all of you. I want to personally congratulate you for this bold step you're taking. Many are called, but they say what? Few are chosen. So you heard what Chidi said. I want to thank Chidi in absentia, is an alumni, for sharing that testimonial with us. I'm very, very appreciative of these guys, not only because they came to learn, but very few of them who try to push themselves through to succeed on the program. I would say that anything that's going to be successful, it's not going to come cheap. And I don't mean money every time I'm saying cheap. I mean time. I mean your availability. The input, what you put in is what you get out. Chidi was saying something about that guy who testified, who gave the testimonial. He was saying that all he had learned before, he decided to put them away. Because there's this proverb that says you can't teach an old dog new trick. That means that an old dog feels that he knows a lot. He already knows. And sometimes when you're teaching him a new trick, that knowledge that he had will be interfering with the new knowledge. And that's because his mind is blocked. He's not having an open mind. It's a beginner's course. But don't make mistake. If you have been training before now, when I say something is beginner's course, trust me, we have people who came for our training program. They have zero knowledge. By the time they exited from the program, 2 months after, they could teach a guy who's been trading for 10 years. I'm telling you with all humility, they could teach them when they talk, people are like, what did you encounter? Where did you go? So don't think that when they say beginning trader, then it means you have been trading for 5 years, 2 years, 1 year, then it's not for you. No, there are some foundational knowledge that you might need, and this is where you will get it. Some of you will say, I don't want to be a trader myself. I just want to know what trading is all about. I want to invest money with somebody who would trade for me. But in that case, you should know what you are trying to do. You should know investment you're trying to make. You should understand how the market works. So that will also help you to know what to expect and the risk associated with investment you're taking. And some of you are young or mid career and you want to switch your career to trading. You're looking for, what does this thing offer me if I change my career to trading? Just like how long it has taken you to build your career to where it is, it's not going to take you as much in Forex trading though, but I promise you that Forex will definitely give you that your financial goal. I'm telling you the truth. To set you on that your financial goal, if you can be as dedicated to it as possible. I'm telling you the truth. It's going to make you meet that financial goal eventually. There's a level of wealth you have to get to. To maintain income at that level, you must be an investor. I'm telling you, go and look at them. Go and look at them. When you see them get to that level, he's a billionaire. Look at Jay-Z. Look at Kanye West. I'm just mentioning celebrities. These guys are very busy in their normal lives. But these guys are investors. And it's not even their career that gave them the billions. No, go and check their portfolio. They invest in stocks. They invest in bonds. They invest in new ventures, new companies as venture capitalists. It's all investments. It's not your career. Your career doesn't guarantee you that level of wealth. Because why? I spoke about it in one of my webinars. I said you have a 24-hour time, and that time cannot be increased. No matter the amount of money they are paying you now, listen to me and listen good. I love you so much. And that's why I'm telling you this. No matter the amount of money they are paying you now, even though they can be paying you $1 million per year, listen to me. There's a time in your life you will not be able to earn that money. Why? Because you can't work as much as you're working. And even right now, if you don't appear for that work, any month you don't appear, you don't get paid. You cannot live your life like that. Listen to me. You cannot live your life like that. So, whether you like investment or you don't like investment, investment is the way I'm financially free. It's investment, whatever form of it. Do you know why? That is the only medium where you can put your money away, or your money can be working and you can decide to rest. That is the only medium where you can command the money you want to make in a year. You can actually practically say, some people can even just make a single trade you don't have to be a full-time trader. You can make a single trade in a whole year. This is the long-term goal. And the long-term goal I'm talking about has to start from now. It's not next 10 years. I don't care the age. Whether you are 16 years old or you are 46 years old, it doesn't matter. It is now, and everybody can do it. Everybody needs to do it. You have to start putting your money in that direction. Getting investment knowledge, whatever knowledge of investment you want to get, if it's Forex trading, if it's stock trading, if it's real estate, whatever it is you believe in. This is the way forward, guys. This is the goal. In Forex Maestro, this is what we are preparing all our students for. I told them in the next 5 years, the least of you will become a millionaire in the next 5 years. That's what I told them. This is a goal for all of us. In the next 5 years, this is what we are working towards in Forex Maestros, both for ourselves and for our students. I told them, I said, look, this is what my goal is. This is what I want to achieve. But you have to plan now. You have to start to plan now. Guys, listen to me. I'm telling you, there's a lot of opportunities right now for us. Now, as I'm talking to you, this is our moment. All over the world, this is our moment. The world is seriously looking for investment experts. The world is seriously looking for people that will change. See, are you seeing how people are losing jobs? Are you seeing how the global economy is crashing? Are you seeing it? Your job is not guaranteed. Nothing is guaranteed. In the next 3 years, next 5 years, you'll be thankful you paid attention to this program. You'll be thankful. You will be very thankful. Today, we're going to be looking at introduction to Forex trading. So I want you to relax your mind. I'm able to help you understand this thing. Trust me. I'm able to help you and open up yourself. First of all, let's understand these people called Forex Maestros. I didn't get to introduce us. Forex Maestro is not a training program. I often tell you, Forex Maestro is a vision. It's not a training program. It's not like one of the training academies. It's not a training academy. You'll be surprised soon that our training will change that direction soon. But point is this, we are not teaching people because we want to make money from them. Because from teaching them, some people have said some of those traders, they teach people and then they collect training fee. So I used to ask them, how much is the training fee? $500. That's what will make me rich. That's the apprenticeship program they're talking about. So that $500 is what will make me rich, really. So it's very, very funny. Now, what you're attending now is foundation course. Did you pay anything? It's free. So why are we doing this? What's Forex Maestros? What exactly are we? And what are we trying to do? We're trying to raise people, leaders, raise investment leaders of the world. It's a vision. And one of the ways we can do that is by knowledge. You heard what that testimonial said. You say discipline has to come by knowledge. If you don't know, you don't know. So we invest so much in developing a training program that when we teach them, these guys eventually will become part of Forex Maestros. So we call all our students Forex Maestros. So now that you have joined a foundation course, you can call yourself a Forex Maestro. Not that you are, Forex Maestro means that you're a professional. No, you are just part of the family. And that's how we see you. Now, as a family, as a group, or as a people trying to achieve leadership in investment management or financial freedom, whatever it is, what are the beliefs that we have? What are the things that we hold dear? Every family has got their beliefs. What are our beliefs? What are our tenets? Number one is proven strategy. All strategies that we're going to be using, or that you will be using as a Forex Maestro, has to be proven. You must learn how to prove a strategy. You heard what that testimony also said. He said ability to research was another thing he took away. That the fact that he could just see those things in history, the way he learned it, it's mind-blowing. Most traders, the strategy they are trading, they don't even know they don't know if there's such a thing as research. They didn't know. They don't know. And so we do it a lot. We research. If our research is our blood, our lifeblood, that's research. We do it. Our students do research every week. Are you me, guys? So for yourself, every strategy, when we say this guy is the Forex Maestro, we know that the strategy this guy is using has been tested and proven. That's what proven strategy means. So if you're gonna be a Forex Maestro, it means that you want to make sure that you have the skill that every concept you're going to learn or execute in your investment life, they are tested. They have been tested by you. At the beginning, maybe you're not able to do that, but as you grow in your skill, it also means that every strategy we teach you here has been tested and proven. Tested means that it has gone through the test of time. The second thing is research. He mentioned it. It's good to learn that skill as well. Capital appreciation. We don't believe in losses. Hello, we don't. I'm not saying that you cannot have some little losses here and there. We don't believe in that. We don't go bragging ourselves and say, me. Some traders. Have you been in a community of traders before? If you hear how they brag about losses, you'll be wondering if losses are something people should brag about. I understand when you're trying to share your experience and say, I lost some money, but they're bragging about it. Have you heard people say like, How much have you lost since you have started trading? That one says he has lost $1,000. You have only lost $1,000. I just starting. Me, I've seen like this. I've lost $5,000. The other one will now say, you just $5,000 you have lost. You just 1,000 you have lost. You have people are just learning. Me, I've lost $10,000. Nonsense. That's what happens. It's rubbish. Nonsense talk. How can you be bragging about loss? Is that a way to encourage people? No. So people say before you can make money in Forex, you have to lose. They just, I don't know. Let's move on. We don't believe in that. And that's why we have solid risk management plan. And we teach that to our students as well. You have to learn to know that. I have a solid risk. We do not believe in loss, in crash. When you see a Forex maestro tomorrow, you can hit your hand on the chest and say, that guy, you know, go crash your account. Crash, you know what crash means? Crash means that the guy carried your money, burned it. That's what crash means. Your money burnt it. Nothing came out. Not even 10% of the money was left. Why? Because the guy has learned how that will never happen. Risk management. We believe in risk management. We believe in using stop losses. Some of you will know what that means. If you don't know what that means, don't worry. I'm going to get into all that. Because I've seen people, somebody was doing a webinar and he said how not to use stop loss. I'm like, and people who attend this webinar, I sure know that people attend that webinar. How can you want to go and learn how not to use stop loss? Just like you're going to learn how not to use brake of a car. You're learning to go to heaven early. Maybe you want to go to heaven early. How can you go and learn how not to use a brake of a car? So the person that put the brake of the car, you have sense more than him. That's what some people do. And some people don't even know that they don't have risk management plan in their trading. All right. Knowledge sharing. Oh my God. We love to share our knowledge in Forex Maestros. We help ourselves a lot. You see our past alumni, they come back to class to teach it. Oh my God, such a love. Such a love. I told them, I said, my secret is that the more I share, the more I get. And they've embraced that too. Then finally, we build track records. So you're going to learn how to start building your own track record. When I came into this industry several years ago, I was in a group of traders meeting and I asked them, how many of you have track record of trading? Say 3 months. And very few hands. And these guys claim to have been trading for several years. And I said, you never thought that there would be a need for that. Listen, guys, Forex Maestros is a world-changing set of people. If we are going to change the world, if you are going to transform your country, some of you are in Ghana, some of you are in US, some of you are in UK, if you're going to change that nation, because that success doesn't stand alone. People locate people who are successful. When you see successful Forex traders, if they stand up and tell you how many people tell them to manage their funds for them, you'll know what I'm talking about. No matter how successful, if you're successful in trading, even though you don't want to do it, people will ask you. People are desperately looking for solutions. Now, let me warn you ahead of time. Now, to get to that point, you have to build a track record for yourself. You have to know that there's such a thing as track record. Consciously start doing it now. Start gathering it. I must let you know that I worked as a broker for like some years before I got the job. Let me tell you the CV I went with. So that's the first time I'm hearing that they employ people that teach people how to trade Forex. I didn't know that there was such a job function. I just finished university. I did engineering. I didn't even do anything to finance. Then I saw a vacancy that says they need people that will teach people how to trade Forex. I said, what kind of CV, what kind of requirements, qualification will such a job need? And I love to teach people. So I said, this is a good platform for me. You know what I went with? My trading results. I went with I think it was 2-year trading result that I had. And it was just like $100 I was there. I submitted with my CV. As I'm putting my CV was like maybe a page. My trading result was like about 5 pages. I submitted, they didn't request for it, but I just said, I need to prove to these people that I know what I'm saying. And I submitted my trading results. And they're like, we don't need that. Simply take it. Just, I want you to know that I'm not coming to. I'm not just. I do what I'm saying. I challenge you to. I challenge you. So when you're telling me, Mr. Conrad, I can do trade for 1 year. I can trade for you. I can be a part of you. I can do this one. I can do. You have not gotten my interest yet. You know how to get my interest now. Not only me, even your investors, even your friends, even your colleagues. It's because we talk. If we have results. Asset classes. What does this mean? What does asset class mean? I know I'm jumping straight up. I didn't tell you, oh, what is that? I just want to take you straight into it. What does asset class mean? And in a very simple way, when you say we're trading certain asset class, what does it mean? And how many of such asset classes do we have? So we have these are the things that these are the assets we trade, financial assets that we trade. That's the definition I can give you, a layman's definition. So asset classes are financial assets that we trade, simple thing. And because people are saying, forex traders, what do they do? What is their job? What do you guys do? We trade. What do we trade? We trade asset classes. So what are these asset classes? There are so many of them. Is that okay? So the first one is currency, FX. And currency means that we predict currency directions. And we don't really predict it. We try to make money, increase our financial worth by predicting currency, appreciation of one currency over another currency. And we have a platform where that is done. That is the next class for you tomorrow, I guess. So we trade currencies, and this is what is popular. Also, we trade shares. Shares is common. Stock is common. What is shares? Shares is what guarantees you ownership of a company. So if, for example, you see Amazon or you see Alibaba or whatever company, and you say, I love this company, I want to buy their shares, or Tesla is popular now. You say, I want to buy Tesla share. When you buy 1 unit of Tesla share, you're part of the owner of Tesla. That's the way it works. That means that if Tesla's value, the share value appreciates, if the Elon Musk himself makes more money because his wealth is tied to the shares he owns. So if he's making more money, it means that the value of his shares has increased. Automatically means that you too, that you bought his shares, your value, your worth has increased. Are you following, guys? Your worth has increased. So we trade shares as well. We know what shares to invest in. We know what shares not to invest in. And that is what we refer to as a forex trader. It's not only the currency. It's not only currency. Some of you think that's only currency. No, we trade shares. All right? Which is a unit of ownership in any company around the world. And the good thing is that you can be in any country and trade the share of another country. What a world we are living in. What a world. This was never possible 10 years ago. See, if you don't become wealthy in the next 10 years, you have yourself to blame. I'm telling you the truth. Right? Go and write my word down. This 2020, 2021. By 2031, if you don't have at least $100,000 in your account from investment and trading, is you, is nobody else, is you. I'm telling you the truth, is you. Because 10 years ago, I can imagine, I was a trader then. I love US shares. I love their stock. I knew Amazon back then. I knew Facebook back then. But I couldn't buy their shares. I couldn't trade them. SP 500, oh, my lovely index. I couldn't trade it. But after the years, now we can buy from your country, whatever country you are in, you can buy the shares of companies in the US, companies in the UK that are on the stock market. What a world we are living in right now. The wealth is actually now global. The wealth is now global. My audio is to the fullest. All right. So check again. We can trade. We also trade indices. Indices, example of indices is SP 500. I gave you example of shares, Tesla stock, Amazon stock, Facebook stock. Example of indices, SP 500. SP 500. What are indices basically? Indices are like portfolio of stocks. Collection of stocks. Let me use a simple way, a simple explanation. Collection of shares or stocks of company. This one can also be called stocks, just in case you read it in a book. So collection of stocks is what we call indices. How do you mean collection of stocks? Okay, so there are some companies whose responsibility is to determine which stock would rise, and that's their own business strategy. They're analysts, they just want to design stocks that they know that will rise, and they'll put them together. They can put 500 company stocks together, and they say the name of our company is called SP500. And we are sure that with our own analysis, these 500 companies I will put here, if you buy into them, you are going to be profitable. That's how SP500 came about. So SP500 became a company, and then from that they had a product which is called the SP500 index, and that itself is now traded like a stock, like a share. So when you buy 1 unit of their company, you're indirectly buying the 500 companies that they invested their money in. It is kind of a fund of fund kind of a thing, but it's been standardized now, and it's been there for several years. I said, how come I'm just knowing? You're just knowing, but doesn't mean that it's today that this thing came. When I see some of the things that are popping up in trading these days, people are trading new assets that are popping up. You see the cryptocurrency, you see the new assets. A lot of new stuff, and you're wondering, I wish that I could join in earlier. You see the idea of joining things earlier is not in trading. That thing is in Ponzi scheme. Anything that has to do with if only I could join in earlier, so that because the people that join earlier are the people that will make money before the other ones will come. It sounds like Ponzi scheme. Investments today, tomorrow, next 10 years, it is here. That's why I told you, it is not here that you say an opportunity lost can never be regained. It's a lie. It's not here. That's Ponzi scheme mentality. In trading, when you actually miss an opportunity, you have to wait. Discipline demands that you wait for your strategy to click before you take another opportunity. Is there coming around the corner. I can guarantee you. Say, I missed Bitcoin when it flew up. Okay. Oh, I miss Bitcoin. Don't worry yourself. Bitcoin is still coming back to where you'll be able to get in. That's because you know how to trade. Are you following what I'm saying? So there's no opportunity that is lost in trading. When I show you this SP500 chart, you see that for several years it's been going up. Several years. For 60-something years or more, it's been going up. It's a benchmark of returns that most investment companies say, oh, this is their benchmark. We beat SP500 return for the last 10 years. We beat SP500 returns for the last 5 years. SP500 has been generating 2% per year, 10% per year. We were able to generate 50% per year, 40% per year, because it's a popular investment. SP500. SP500 will make you rich. Like, I don't know how to say something to you. Sometimes I'm just, oh God help me to communicate to you. Listen to me and listen very good. Be doing your career, be doing your job, okay? But from today, begin to carve a part of your life. That part is called investment life. Don't listen to me and go back to your career 100%. No. You will take 10% of your time you give to your career, you will give it to this thing I'm telling you. From today, you will begin to have a part of you. The only thing you'll be doing in that part of you is to think about investment, how to develop yourself, what investment vehicles are available, how to protect your investment, how to grow your funds. This is what you'll be thinking. I assure you, as you begin to think like that and work towards it, the next 5 years will be different from the guy who never had that structure, who is just, let me just finish my degree and go look for job. In 5 years, the guy is back to base. And I forbid that for you. And no. I forbid that for you. I see some things and I say, why is this? How can this be? Why should this be? In the house where I was staying in Nigeria before I left, the landlady had some units of apartments inside that house. And she makes sitting down. She wakes up and sit down like this in front of her house every morning. I calculated how much comes into that woman's pocket every year. I was amazed. That woman is over 80 years. She was richer than a bank manager. Not doing a dime. She practically comes out to take some fresh breeze and goes back into her house. Did she build that house one day? No. Perhaps when she was 22 years, 18 years, when her mates were jumping around the street, she was thinking about investment. I don't know how many investments she also has. And one day I was stepping out of the house and I saw an elderly woman of her age, and that one was helping her to clean her house. They were of the same age. Now I saw two elderly women. One was cleaning the house and one was a billionaire. Or be millionaire, whatever. She's the owner of that's the landlord, the landlady, and she's employing the old woman. That day, throughout my work, my time in the office, I was just thinking. I said, God, I refuse poverty. In fact, there's an age I'll get to. I will go to work because I want to work. This is the same old woman. Another old woman of her age employing her because she has to survive. And she has to, what she does to survive is to clean. So several questions ran through my head about this old woman that had to work at that age. Several questions. I said, what was she doing at 26? What was this woman doing at 18? When she could run a mile, when her energy was on fire? What was she doing at 30? What was she doing at 35? What was she doing at 40? What was she doing at 45? I kept asking questions upon questions upon questions upon questions. Listen to me, guys. Listen to me. If after you are hearing me tonight, in the next 5-10 years, your financial life is still the same, you're not going to blame anybody. You're not going to blame anybody. Let me not go into investment. Let me not go into all that. But that elderly woman, when I saw her, I said, no, I will never grow old to have to work to survive. No, this is not right. I'm talking about SP500. SP500 can make you retire rich. Are you listening to me, guys? Investments can make you retire. It's not the type of investment you're looking for up and down. Some of you are looking for Ponzi schemes and you have been beaten. You now think that what we're doing here is Ponzi scheme. We're not doing Ponzi scheme here. We're not trying to multiply people's money here. No, that's not what we're doing here. We are really teaching people, giving people power in their hands directly. That's what we're doing here. We're not teaching Ponzi scheme here. We're not teaching you how to come and give us money and we'll give you back some money. That's what you are looking for, and some of you have gotten your fingers burnt. But have you not learned enough? Have you not learned your lessons? Please, retract your steps. Relax those your priorities reorder those your priorities. It might take some level of building. It might take you 5 years to build yourself. It might take you 10 years to develop your skills. But please start today. Are you listening to me? Start today. That elderly woman I gave you a story, she didn't start a year before she was 80 years. I'm sure she started at 25 or even 18 years. I'm telling you. She started collecting properties, I'm sure at 18 years. When her mates were buying what was raining in that period, she was rather thinking what land she could buy, what investment she could buy. I'm sure she learned her lessons one way or the other, but she continued. Are you following me? Some of you that are Christians here, I'm not trying to preach to you, but the Holy Book tells you that what? A good man leaves inheritance for his children. It's not the other way around. You're not going to grow old to depend on your children. That's not what they told you. You have to grow old. And that's the funny thing. People think that when you're going to grow old, your children are supposed to now take care of you. They even make such prayer. But that's not what it says. It says a good man, he will leave inheritance for his children. Not even only his children, his children's children. That's the order. Do you think Bill Gates' great-grandchildren will ever suffer? Or Warren Buffett? Do you think they will ever go through any problem? Do you think they can make any mistake they like? They are still going to get back on their feet. Why? Because there was a good father, a good man that left inheritance for his children. That is the order. And this is coming to you at this time. Please take advantage of what you have now. You are hearing testimonies. You are seeing people building themselves. I mean, people are digging. People are reading. People are studying. People are researching. Come to Forex Maestro programs. Come and see. Research all over, everywhere. Classes, learning. I told my tutors, my guys, keep teaching. Every month, make sure there's a new teaching. Don't mind who attends the program. You just be pouring out. There's one person that will be taking all of them. Just don't mind. Don't say, people will not attend. Don't worry yourself. Just keep pouring out. So you have to learn. Because do you know what it takes for us to develop a training program? We study, we practice, we research. We just don't come and teach you curriculum. Say, okay, because we put all. No, we teach you. Remember our tenets. We teach you what is researched and proven. So it means we are studying. We are not those kind of tutors that we have crescendoed. We have now halted our knowledge. So what we are now doing now is we are here. Some of you are like that. You think there's nothing else to learn in Forex. Some people tell me, what else are we learning in Forex? When I hear that thing, it used to hit my ear. How can you say what else are you? What else? Conrad, Forex seminar. What else is there to learn? It's not Fibonacci. Is that not all? That shows you where they are going. Oh my God, there's a lot to learn. There's a lot. From what you are even learning, there's a lot to relearn. You can take a strategy like this now, optimize it. That strategy I've been using like that for the past 10 years. All of a sudden, one night, you just thought, wait, what if I did a strategy like this? And you took it back to your laboratory, you retest it, you simulate it, it brought out a better result. You say, what is there to learn again? Please, open up your mind. Open up your mind. Listen to me. I'm not here to entertain you. I'm here to change your financial story. I don't keep many friends. Those who go close to me know that I don't keep many friends because I have a journey. I don't have time. So I keep friends that are going in that direction with me. With all apology. I don't mean to hurt anybody's feelings. But my time here on earth is timed. It's timed. Maybe I live up to 100. Okay, fine. But my time is timed. That's the truth. And I have a target. I have a journey for myself, for my generation, and for God. So I need to be serious with it. This is serious business, guys. Your life is dependent on it. Your children are dependent on it. Your grandchildren are dependent on it. This is serious business. So please, I'm saying all this not because I want to be hard on you, permit me, but I'm just trying to make sure that from tonight, you would not think the same way you have been thinking about Forex. Your thought about this business will change. It will change. And that's what I'm hoping. So let's get back. SP500 can make you rich. That's where I stopped. SP500 can make you, your future is set to do. You see that how that old woman had a house that she milks money from at the old age? SP500 and other things that I'm going to share here with you can do that for you. Even better than that, real estate. I'm not talking down real estate. I love real estate too. But I'm telling you what is a very, how do I put it now? Tested and proven approach. Is that okay? So S700 is one of the example of index and is a collection of 500 large companies in the US. It's brought together by a company, and that company's goal is to ensure that there are certain criteria they use in picking the stocks that will be in the index, and one of them is that the stocks must be heavily traded on the stock exchange, and they must have a lot of capital base. So they chose the 500 stocks by themselves, and they ensure that the stocks they're choosing collectively, it will make the index kind of appreciate in value, in worth. So all you are doing is just trading their brain. So as a trader who knows how to do trade index, SP 500, and you know how to trade stocks, you know how to trade Forex, currency, the sky is the limit. Commodities, we have gold. So example of commodities are gold. Okay, so in case you're writing down, so we have gold. Let's even break it down. There are different types of commodities. We have the agri commodities, and then we have non-agri commodities. Okay, so agri commodities, some of the brokers platform, you will see different agri products. Okay, like cocoa. Like this is gotten from the commodity exchanges that is nearby to those. To those brokers. You can also trade those commodities. Okay, back in the days before we got computers, several years, hundreds of years ago, in the early Japan, we have the commodity traders. They call them the rice merchants of Japan. So what they do, these guys are not selling rice for people who want to eat. They're not buying rice because they want to sell to end users. They are buying and storing rice because they will trade. There's what they call trading, and there's what they call business. Trading is that they bought the rice because it was cheaper at that time of the year. They will sell it when it is higher. There's a timing. That's what they call rice merchants. They call them rice merchants. And that can be applied in these days to anything, any form of commodity. Some of your countries you are living in, they have agri commodities. Find that out. A lot of them have commodity exchanges. In your countries, find them out. In Nigeria, I'm not sure. Ghana, I think they have one too. Those are the two countries that I know about, and of course, US has, UK has, others ones have. So, you can actually trade on those exchanges on the commodities. Gold too has an exchange, and you can trade gold. You can trade it on timed. That means there's a time when gold is cheap, you buy. There's a time when gold is high, and you sell. Okay, that is another one. Then we have energy. So energy, example of energy is crude. Example of energy is crude oil. There's also natural gas. This is another energy, natural gas. These are things you don't have to have them physically. You just need to trade them via an exchange. That means how does this exchange work? Let me finish up with this. I'll tell you how an exchange works. Then the final one is the cryptocurrency. I guess so. Yeah, cryptocurrency is the final one. So cryptocurrency is pretty new. Some of you have already started seeing how Bitcoin is doing wonders. And you're wondering, oh, I'm late. You are not late. Oh, please, don't say that. You're not late to join. All right, you're not late, and I don't want you to mind whatever any government is saying. Any government of a country is putting up against Bitcoin. The truth is this: I'm not a political person. I can tell you for sure, in the next 1 year, we'll see the truth of all these countries. They have their own cryptocurrency plans. It's a business strategy. All right. So don't let it deceive you and run away from cryptocurrency and say, oh, it's bad. Government have advised us against it. Government has never helped anybody. The government is not set up to help you. Am I shocking you tonight? No government in the world. I'm sure you're like, US government, US, America, UK, the government love the people. Government has never set up any system because they want to help you. I hope there's no politician here that has told me. And why did I say that? If government wants to help you, why don't they reduce your tax? If government wants to help you, why don't they even remove tax completely? Yes, you say, they have to make money. Who told you? They print money. They print. Maybe I will give you a seminar on money, on that thing called money. You understand why you should never slave yourself a day for it again. That thing called money is printed, is a paper. They have the right to print as much as this year alone. US government printed, they doubled the amount of money. At the beginning of last year, I gave you statistics. At the beginning of last year, they had about $19 trillion in circulation. They doubled it. They printed more money on no justification. Just printed it. And so if they want to help you, why don't you just share the money as they're doing stimulus now and then remove tax completely? Cancel all the payback loan, everything. The government, US government is doing it. They are even removed, they reduce your interest rates to their money, they will reduce to 1%. That's to tell you that the money is useless. They are printing it, they are printing the paper. So listen to me. There are no, why am I saying it? No country in the world is setting up its government to help anybody. It's not even feasible, it's not possible. No country in the world is setting up any government, anything to help you. Nothing. Are you listening to me? So, cryptocurrency or no cryptocurrency, I'm not going to get to that argument. But what I just want to let you know is this: they have their own plans, and we will see the truth in the next 1 year, 2 years. You will see, they will bring out their plan, and we will all see. But that's what I'll stop. You just continue your knowledge, just continue your learning. But I'm telling you, never listen to the government when it comes to this investment. Anything that's to do with investment, I don't know about other policies they make, but investment, money, they don't want you to be rich because they don't even know how to make themselves rich in the first place. So you being rich is like you're trying to prove to them that you're smart. They want to even take from it. They don't want you to be rich. So you don't depend on them now. Everything has to be on yourself. So when you are making your reading and studying on cryptocurrency, do independent study. Don't hear what policy government is bringing up, sanction cryptocurrency everywhere. Do your own independent study. What does this cryptocurrency have for me? How can I be successful with it? That's what I want you to do. And when we have a seminar or webinar on cryptocurrency, we are hoping to have some soon. Attend and learn for yourself. Okay, so these are the asset classes that we trade. And again, let's go over it. The currencies, we trade currencies over another currency. We trade shares, we trade indices. An example of indices is SP500. We trade commodities like gold, silver, and agri commodities like cocoa. And also we trade energy, crude oil, natural gas, and then we trade cryptocurrencies. Example is Bitcoin, Litecoin, Ethereum, and so on and so forth. So when you say I'm a forex trader, this is the assets that we talk about. So making profits, quick one. How do we make profits? Listen, this is very pay attention now. How do we make profits when we're trading? The basic concept of making profits is very simple. You see when I explain it now, you see that it's very simple. In a normal conventional life, when something is rising in value, you buy it cheap, you sell it high, and you make profits. Same thing. So when an asset is rising, for example, now, let's say we have an asset and that asset is worth $1,000, whatever asset it is. I've mentioned the assets for you now. We have the currencies, we have the stocks, we have the SP500, we have the energy, we have the commodities, we have the cryptocurrencies. Any of them, let's say 1 unit of it is $1,000, whatever assets, and it's about to rise. What you do after you have analyzed that this thing is going to rise is to buy 1 unit or as much unit as you have money for. Buy that asset at that time that is cheap. And when you buy it, what happens? If it does rise as you planned, let's say this guy bought 100 units of the asset, and the asset is cost 1,000 per unit. And now you're able to buy 100 quantities. That means you spent $100,000 to buy the assets. Sorry, I'm using big numbers, but you'll find out that these big numbers only mean leveraged numbers, okay? So which means that everybody here can trade this quantity of assets. Yes. You say, yeah, really? Even with my $100? Yes, you can. But I'll tell you more about that, okay? That's called leverage, using leverage. So you're able to buy like 100 units of this asset. That means you spent $100,000 to buy 100 units of this asset because each unit cost $1,000. Just multiply it. Now, you know why you are making this decision is because you think that the value of the asset will what? Will rise. Let's now say it rose as you planned. Over some time, the asset just kept rising, like Bitcoin is doing now, just rising, rising, and rising, and rising, or SP 500 or gold or whatever. And you're watching, paying close attention, and it rose to a certain amount, maybe $2,000 per unit. Now it has doubled your value, right? So that's $100,000 that you spent on it. If you wish to sell that asset, all the assets now, you will be making how much? You'll be selling them for what? $200,000. We'll be making $200,000. You bought an asset for $100,000 and now you sold it for $200,000. That means you've made a profit of $100,000. How did you get that? Subtract cost from revenue. You bought it cheap, you sold it high. You bought it cheap, you sold it high. You bought it low, you sold it high. Why? Because you knew that the asset would rise in value. You knew. Question mark. How do you know? We'll get there. But let's forget that question mark. But the point is that you knew. Is that okay? What about, we said that in trading, you can make profit whether the asset is going up or is falling. So that means that time Bitcoin fell, last time it fell, some people made profit when it fell. They say, yes, how did they make profit? I thought that it's only when asset is rising that people make profit. So that time that stock fell, Tesla stock fell, people made profit. Certainly. Really? Yes. Even though Elon Musk himself made loss, some people made profit. You say, how is that possible? This is why it's possible now. So pay attention. Pay attention. How do traders make profits when the asset they are trading is actually falling, not rising? It's a very simple approach. And I'll explain it to you, okay? So follow me. Let's take, for example, another asset that is worth $1,000 now. This time around, it's not going to rise, it's going to fall. No. So how do we make profit from it? The first thing is that, before we sell it, the first thing is, before you can make profit from a falling asset, there has to be an exchange. Listen to me. There has to be an exchange where you can borrow. This is the word. I use the word as a layman, where you can borrow that asset. You say, well, we borrow assets. Yes. Let's put it in perspective now. Tesla stock is going to fall. You knew it's going to fall. You knew. Let's forget about how you knew, but you knew it was going to fall. You now go to the stock exchange or the intermediary and ask to borrow 100 Tesla stocks. You want to borrow stocks? Yes. You want to borrow stocks, not money, stocks. And we'll return the stocks. All right, fine. They loan you the stock because it's possible to borrow stocks, to borrow assets. They loan you the stock, 100 units has been loaned to you. When do you return it? How much stock do you return? You return back the stock you borrowed because it's borrowing. So you return it back later on. I'll tell you about how they charge the commissions and everything later, but just get this whole idea. So you borrow an asset from the exchange, and when you borrow that asset, you make plans to return it back. So, but then when you borrow it, what do you do with it? You now sell it. You now sell it. When you borrow that asset, you now sell that asset. You borrow it first, and then you now sell it in the market. Make sure you sell it immediately before the price falls. So you borrow it, although with the platforms that we are using now, the moment you click to sell, it automatically does everything for you at the same time. Just note that borrowing has been done. Borrow 100 assets, 100 Tesla assets, and then sell it out. So let's say one Tesla asset was costing 1,000. Now you sell that stock asset you have borrowed. You sell it out in the market for $100,000. Stay with me, follow me now. When you sell it, you keep the $100,000 with you. Now, what you said was you knew that the stock will fall in price, not rise. You want to make money from when it falls. So stock falls as you have predicted. It keeps falling from $1,000. Tesla stock has fallen down to $900 per stock, $700, $600. Now it is now $500. How do you now make money? Stay with me. You know you borrowed earlier 100 stocks, sold it, you kept some money in your pocket, right? Or maybe your account, your trading broker's account, $100,000 from the sale of 100 units of Tesla that you borrowed. Now, when the Tesla stock now falls to 500, it is now time, because you feel, oh, this is where it's going to fall to. Because Elon Musk is getting angry now that his stock is falling. He's changing CEOs, changing CFOs, putting structure, trying to boost the value of the stock again and the value of the company. And you know that, all right, this is where I think it's going to fall to. It's time for me to exit and cash in my money. So how do you do that? Now, remember you borrowed 100 units of Tesla. Now you're about to sell it. And sorry, you already sold it. You already sold it now, I made 100,000. So now you're about to buy it back. You're about to buy it back because you want to buy back the shares of Tesla to return it back to the lender. So you buy back the 100 assets. That's what you need to return. You borrowed 100 assets. You are returning back 100 assets. Whatever you borrow is what you are going to return. That's the agreement. Because the lender to you, lender might think you are foolish. Lender will be like, this one is borrowing, he's selling Tesla stock, doesn't know what he's doing. Tesla that is rising. So you say, why? Because I've said this in a class before, and the students were like, why would somebody loan me the asset? Because the person thinks that you are foolish. That's why he's loaning to you. In a word, sorry, I'm sounding like that. I'm sorry, but the person thinks that you don't know what you are doing, that you will lose. So he's smarter or something like that. But basically, there's an exchange where borrowing is done. And so people they have 100 shares of Tesla. They kept it for several years. So what are they doing with it? The exchange will loan it out and give those people small commission for using their stock to lend. Imagine that I have 100 units of Tesla and I don't plan to do anything with it in the next 20 years. What's it doing in the exchange? I can tell the exchange, if you see anybody that want to borrow my Tesla, let them borrow any small thing that can enter I just want to make sure that they give me back my 100 Tesla whenever I need it in the future. So this is a concept, basically. I'm just like breaking it down like that. So the guy that borrowed the 100 Tesla sold it out, then waited for the price to fall, now bought it cheaper and sent it back to the exchange. So he sold it at 100,000, bought it back at 50. How much do you think he has left in his pocket? That's exactly the profit he has made. You see now, very simple. It means you can even do this thing in the normal life. Your friend has an asset. Maybe she has a handbag. The handbag is raining. No, the handbag was raining before. It's no more raining now. And you look at it, they said, yeah, the price of that handbag will fall. It was $100 before. It's going to fall to $10. I'm just making this as a joke. Or, just an illustration. I'm not saying you should go and do it in real life. So your friend has the handbag for $100 and the bag is falling in value in the market. They send that bag now for $10. But before they sold it for $10, it was falling. You knew that the price of the bag was falling. You approach your friend and say, can you loan me that your handbag? I'll buy it back for you in the next 1 month or next 1 year. You are not even using it to do anything. It's been in your wardrobe for how many months? You say, okay. He said, I'll give you some change for loaning it to me. and then he gave you her handbag, and you took it to the market and sold it for $100, and you are a smart investor, and the price started falling, $100, it started falling, and now the handbag is still for $10, and then you took out of $100 that you have, took $10 from there. You can even buy out two. Buy out two just for being a nice friend to loan you. So it's a common sense. It's a common sense. Just brought it into finance and try to make things stabilize, to be sure that every party is safe, and the one that is loaning the thing, the one that is getting it can repay it back. That's the whole concept. There's nothing magical that they are doing inside this thing. So that is why, as an asset is falling, some people can make money from the fall. This thing that I've explained to you in a very simple way, maybe it took us like 20 minutes or 10 minutes to explain it. This can take you a whole chapter of a book, a finance book, that have just saved you a whole chapter of a book that you will finish reading and you will not even understand what they are saying, because they want to explain how to make profit in a falling situation, and then they don't get it. So what if price doesn't go down? It simply means that this trader has lost. Imagine that after borrowing 100 shares of Tesla, it's expecting the price to fall. Price just went up to 1 unit from 1,000. 1 unit becomes $1,200, and you borrowed 100 units. You've sold it for $1,000. It's about time to return it. The price is not cheaper. Price is even higher. It means that what? You need to bring more money to buy that 100 units of assets. So that's a loss. When the direction of the asset goes against your prediction, it's a loss. And that's why you have to have what? Risk management. And you have to have stop loss, and where you have to stop your loss and everything. I'll get into that later. Is that okay? So in financial world, the asset you borrow is usually the asset to what you return. And that's why it is possible to trade it and make profit when it falls. You don't need the collateral to borrow in trading. No, you don't. How is that possible? I'll tell you why. But there's what they call margin. Let me break it down for you. Now, let's use a house. I'm about to buy a house. Then I approach a bank to give me a loan. And then the bank gave me a loan of 1 million. And when they give me a loan of 1 million, it's a loan. Are you following? That asset itself that I'm going to buy will be in their custody. And that is the collateral. So when I'm taking that money, I'm not taking the money and going to another place. The same broker that is giving me that Tesla stock is still in the same broker's platform that I'm going to execute the trades. The funds are released for trading. It's not like when they give you the stocks, you sell it and they withdraw the money. No, it's for selling. You click sell. So that's why when you're trading, you don't see borrow there. You just see sell or buy. When you click sell, it means that you have borrowed the asset because you don't have the asset, and then you have initiated a sale of it. Okay, so that thing you borrowed itself, that asset is there. You didn't take it. You're just predicting the prices. So when you get the asset, like the house I was talking about, you got a house, you paid for it with a loan from the bank. That house still belongs to the bank. So the bank, let's assume the bank can still control the house. The document is with them. So you don't need a collateral in that purpose, in that case, because they are in custody of the house. They know when the value of the house is dropping. So if the value of the house is dropping, that's when they have a problem with you. So you must have some money with them called, the banks call it equity contribution. In trading, we call it margin. So you must have the money with them called margin or equity contribution. It's the purpose of that equity contribution. You drop to the bank, or the margin. Sometimes it's 20% of the asset or 10%, depending on what the bank or the trading platform requires. The essential purpose of that money is to take away your losses from that money. You see the advantage? That's why the money is there. So when the bank says, go and give us 20% equity contribution of any asset and we'll give you the loan. So you saw a house of 1 million. You went to a bank. Say, bank, I want to buy a house. They say, no problem. Just deposit 200,000 with us. You deposit 200,000 with them. They issue you a check to go or 1 million to go and buy your house in their name, or they will be in control. They can terminate this house. They can sell the house. They can step in and control the house. So the asset is actually with them. So, but they are following your direction, your order. So you bought the house. And then they have the papers, the document. Now the value of the house starts falling as you predicted. When it falls, when the bank says that if they sell these assets at this time, they will lose money. They will look at the money you contributed to them, called the equity contribution. They will say, this guy gave us 200,000, but the value on that house now, the way it's falling, is almost 180,000. It's close to the amount this guy have with us. They will sell the house. Usually, in trading, the brokers will give you warning when you are close to the margin. They give you what they call margin call. I'll give you all the formulas later. I'm just giving you the general explanation so that it's clear. So they'll give you what they call margin call, like an email. They send an email to you that your margin is low. Deposit some more money to maintain your trade. And then you have to deposit more money to keep your trade. So the asset itself, nobody needs a collateral from you to trade it because it's with them. You are just taking decision. And for that decision you are taking, if you are losing, they want a place where they can take the money from to make up that asset so they don't lose money for loaning you the assets. That is how it works. Is that okay? Trading, there's what they call a stop loss. I'll talk about it soon if there's time. There's a stop loss. Stop loss is the point where you don't want to lose beyond. Oh, I'm wrong. Please terminate the trade here. Let me just take this small loss. That's stop loss. So when you execute your trade, you can automatically put that point. The broker recognizes it. That this guy said if he's losing beyond $10, close it. So these are all measures to manage. That's why I say this in risk management, we deal with that. Somebody asked the question, what's the duration? Now, in financial market trading, don't usually find you to a duration. They tell you every day that your transaction is running, you're going to pay commission. They call it swap. Every night. So they prorate it. So if the lending commission for a year is about 5% for any asset you are trading, they will prorate it to daily. That's how they did it. They will break it down to daily, divide by 360 and do all their maths. So they say, okay, if every day this guy is keeping these assets in this transaction, we'll be charging him they prorate it. So they don't tell you return it every 1 year, return it the next 1 year, return it you don't go and tell them I'm returning it in 2 years or 1. No, they just open it end for you. Every day that you are keeping it, they are small. It's very negligible and small. So don't focus on those ones. That's very small. That's because when you say borrow, there's a commission, right? For borrowing, interest for borrowing. So that's how you pay the interest every day. But it's prorated at a very cheap amount of money. But they shouldn't bother about all those ones. Those ones are just peripheral, small. The whole thing I want you to focus on is how do we make money when an asset is falling? Simple ideology. So if your baby asks you now, hey, daddy, you attended the Forex seminar today. Please, how is it that possible that some people make money when asset is falling? It's a very simple thing. Son or junior, it's a very simple thing. They borrow the asset. Like you have a bag or a phone you don't need. You don't need it at all. I can take it from you now. And if I know that the value is going to fall, I will take it to the market and sell it out, wait for it to fall to a very nice profit for me. I'll buy it back for you. You wouldn't even know what I did with it. You just saw your phone now, you saw your phone again, and I come and give you thank you card, credit card. I say, oh, thank you for loaning me your phone. It's a simple thing. I want you to really just conceptualize this thing in a very simple way. All right, that's the best way to go. Okay, if we think an asset is going to rise, two decisions we'll take is to buy the asset first at the buy entry point and wait for it to rise, and then we sell it at the take profit point. And that take profit point is the target point where you think your profit, where you think the asset is going to rise up to. That's what I call it take profit point. It's the point where you think this asset is going to rise up to. That's what we call take profit point. Again, let's go over it. If I know that an asset is going to rise, what am I going to do? You're going to buy first at the bottom, the point where you observe that it was going to rise. That's called your buy entry point. Then you will set a point called the take profit. That is where you think he's going to get to. That is usually above the entry price. All right. Don't forget, your prediction might be wrong. We are not always 100% accurate. Yes. So your wrong prediction should not take you out of the business. That is why we have what they call stop loss points. What then is a stop loss point? A stop loss point is a point where I accept that, my prediction is wrong at this level. Please let me close and take the small kinkini profit like this. I mean, loss, small loss, rather than fold my arms and say it will correct itself. And it never corrected and it went down and lose all my money. That's what 95% of traders are doing. So when you hear that thing that you say 95% of traders lose all their money, you see that lose they're talking about. They're not saying they lose some trades. So no, they said they crashed. That's why we differentiate it from lose. Crash means all the capital, the guy finished everything. And one reason at the early stage now, one reason why they lost, you are learning at the beginning stage now, is that they don't set what they call stop loss. In fact, they have a philosophy against it. What a dangerous way to trade. So write it down. Any seminar, any program, any strategy that says don't use stop loss, they are teaching you how to drive a car without a brake. That's what it means. They will say close it by yourself. Use small loss size. All these things I've taught them before. I'm ignorant of all these strategies that they are teaching you. I'm not. I've learned all of them. There was a time what was reading back then was how not to use stop loss. And I did it for a while until I destroyed my account. So don't even near it. Don't even near it. When you think an asset is going to rise, what do? You buy cheaper, you buy at a low price, you put your take profit at a high price. That's the point where you're going to exit, sell. And then also, you can also sell or exit at a stop loss point below your entry price, because price is going against you to the other side, to downside. So when it gets to that point, you want to exit and save your money. That's what they call stop loss. So now you know what take profit is, you know what stop loss is. So I can mention it freely now, right? All right, let's go on. Now, what about when an asset is falling? The one I also explained to you. What do we do? How do we make profit when an asset is falling? Just two decisions. You sell at where you observe that asset is going to fall. You sell at that time. How can I sell what I don't have? I told you there's always a borrowing that goes on the ground. I just use the word borrowing, but when you're trading on your platform, you will never see the word borrow. You will just see buy or sell. All you just need to click is sell or buy. When you click sell, I'm telling you what is going on behind you. There is a borrowing going on behind you. The broker is activating the borrowing capacity for you to be able to sell. If there's no borrowing, you can't sell what you don't have. You only have dollar in your account. Now you want to sell gold. How is that possible? The broker has to loan you gold from the exchange, and then you can initiate a sell of it. And the money that you have left there in your account is now serving as a margin. Remember when I told you about margin? That is an equity contribution. That's where they take your losses from. In case you're taking a wrong trade, they take it from there until you don't have that money again. And that's when you have what they call margin call. Is that okay? And I'm sure that will not going to happen to you because you know how to use stop loss. So when you sell, which direction is profit? Downwards. Because why? You are thinking that you are going to buy it cheaper. Price is going to go down. So in a sell trade, take profit should be set downward because that is the target point for profit. Profiting is downwards when price goes down. So the further price goes down, imagine that I borrowed something worth $100 and I sold it at $100. And what am I going to be praying for? That price will fall, right? So that direction of your prayer is downward. That's what I'm saying. That's where the take profit will be. It will be down. So you are praying that from $100 that thing will go down to $50, even to $10. It's downwards. That $10, that point you are targeting that to get down to, it is your take profit target. So you see where this is direction now. But if it goes up, you you have to get more money to buy back that asset because you sold it out and it's someone's asset and price is now rising. So as price goes up, you have to put your take profit somewhere up there, so it doesn't go up too much for you to come and be looking for so much money or they take so much money from your margin. There is no advantage or negative implication on any decision you take. This is the most important question to ask. The most important question to ask is direction. How do I know the direction the asset is moving? Is it going up or is it going down? Because I know what to do if it's going up and I know what to do if it's going down. If it's going up, I know what to do. I just buy cheaper, I sell higher. If it's going to go down, I know what to do as well. I'm going to sell now, I'm going to buy cheaper later. So I actually know what to do. But please teach me, how do I know the direction? So I already know what to do, but I want to know how to know the direction, because direction determines what I will do. So this is the grand question in the whole of forex trading. This is all we are trying to answer, the direction, question of direction. This is all everybody is trying to solve. The whole idea of strategy, how to trade, this is all everybody's trying to solve the question of identifying direction of the market, because that is where we will now know what to do. If an asset is about to go up, I'll buy cheaper and sell. Take profit above the entry price. Stop loss will be below the entry price. If an asset is about to fall, I'll sell now. I'll take profit below the entry price. I'll put stop loss above the entry price. So what about when you sell? Where do you set stop loss? When I sell, I'll set stop loss above my entry price. The thing is, you can make profit from both. And what I'm trying to make you into, I'm trying to make you into a trader that you are not going to be you know what people know out there is buy. When they talk about Bitcoin, all they want to do is buy. When they talk about shares, all they want to do is buy. The majority of the whole world, what they know is only buy an asset. That's the funniest thing. You see, selling an asset is like an esoteric knowledge. It's only for traders. You cannot go on TV and explain how to sell a stock. They'll be so confused. That's why in finance books, if you see them, there's explaining this sell thing, it takes a whole chapter. You're not going to be trading like the general masses, because you are going to be taking sell positions too. And they don't take sell position, they just buy. Asset is rising, they just buy. Stock is rising, they just buy. But you can be even making money. Elon Musk is losing, you can make money from his stock. Isn't that interesting? Because we're a trader. It's been a wonderful time with you. Thank you